Hey guys, welcome to the Daily Covered Caller. My name is Max. I appreciate you for being here. I have a really interesting show for you today. Let's check out the agenda. All right. We'll look at the ETF heat map. It looks a little better than it did yesterday, to say the least. We'll check out the Defiance trades right after that, but then we'll look at the buffer report and we'll see how all the the yield max and the other ones that I follow are doing. And we'll also look at the VIX and the VIX of VIX. We'll do a volatility report since it's elevated lately. We're going to look at something different. Then we'll look at the Tesla crash delta neutral trade, see how it's doing today. And we're also going to check out, speaking of volatility, how ZIVB, SVOL, and THTA are doing today. Those are funds that are short volatility funds. So they typically don't do well in times of heightened volatility. So we'll check in on them today. And we'll also look in on the $1 million baby trade. All right, so the heat map. So this looks way better. So gold and bonds pulling back. Bonds probably the worst thing on the board right here. TLT, the worst big thing on the board that's not leveraged or inversed or something. Good to see Bitcoin getting back some of the ground they lost yesterday, up 5%. Anyway, this is, who knows? It's probably just a temporary reprieve. We'll see. We shall see. I'm still kind of skeptical about this market, or I'm still very skeptical about this market. Let's just put it that way. All right, so let's look at the Defiance trades. So we'll start with triple QI. We'll turn on live quotes here, and we'll see how we're doing at this point in the day. So these guys sold options for $245. That's a ton of money. Right now, they're paying zero to get them back. The market's rallying. They sold the 18,000 strike. The market's trading 255 handles above 18,000. So it's having a big bounce back day today. So all three of these should be in good shape as far as Defiance goes. And also the dividend's going to be impressive this month. It was impressive last month, and it's going to be even more so this month, it would appear. Less volatility dries up in the second half of the month. Same thing on this one. These guys sold options for 54 today. Yesterday, they only got 48. The day before that, 45. They got 54 today. That's the most that JEPY's ever got in its history for any options. That is insane. And it's all profit right now. It's $1 million profit right now. That's impressive. That's impressive. I guess they made 900,000 about on the 31st of last month. That was impressive also. Down 95 cents. That's also impressive in the unimpressive way. Down 95 cents on earnings per share. Let's go back here and check what triple QI was. They're down 87 cents on earnings per share. The dividend estimate is, I can't think in new terms. The dividend estimate is $1.46 in old shares. That's gigantic. That is gigantic. Holy cow. Okay, well, so that's impressive. So JEPY, their dividend estimate is $1.12 in old shares. That's impressive too. Down 95 cents for the month. Okay, so now let's look at IWMY. We'll turn on live quotes here. These guys sold options for $32. That's the most they've ever got. I'm almost positive of it. Right now, they're probably worthless, which is good. They sold the 2055 strike. The market, Russell, I should say, is trading at 2061. Nice job. Nice job, guys. So these guys have a 6-point buffer before they lose money. But the market could turn around at any moment. It's just good to see these things have a bounce back day. Like I say, when we look at the volatility report, I'll show you why I'm still skeptical on the market. All right, so these guys are down 93 cents a share, so that hurts for sure. Dividend estimates $1.52 in old shares, and one time they did get $1.41. So this one isn't just out of the park crazy, but the other two are out of the park crazy. $1.12 for JEPY. I mean, let's figure that out real fast. So 76 cents. $1.12 minus 76 cents. So it's 12 plus 24, which is 36. So it's 36 cents. So a 36 cents improvement on something that was only 76 cents to begin with is like 50%, just about, or something close. Wow. All right. So that's a hell of a deal there. Let's see, triple QI estimate $1.45, the highest they've ever been. I think they were over $1 before I started following them, but it would be about a 40%, premium on them as well. All right, so now we'll check out USOI. Now these guys, their options don't expire till tomorrow. Let me fix this really fast. All right, so what these guys have done, they sold the 75 strike for $2.59, which is also a batshit insane amount of. You could see the other time their other option prices up here, $1.45. They got 210 once, but that's this. It's a record for them. So they what they're reading on when they sell a 75 put, they're reading on the price to be over 75. Right now, the price of USO is at 73.13, unfortunately. So let's check out the chart on that. The good thing is, though, they receive so much premium for that damn option that I think they're still in the profit box. Yeah, they are. That's how profit boxes work. Profit boxes get bigger as you receive more premium, and they receive so much premium, their break evens down here at 72 and change, 72.40 or something. So they anywhere they can get in this range, it's a profit for them. So great job, USOY. All right, so now let's look at all right, so we covered Defiance. God, I just feel so bad for Tress. I know they closed Tress down because the bonds didn't have enough volatility right before this bond volatility explosion. Look at this. Tress would have just been murdering it. Anyway, it was a long volatility fund, and people just aren't ready for long volatility funds. They really aren't ready for short volatility funds, which is everything else. Every other type of yield fund is short volatility. This was the only long volatility yield fund that I know of. Well, other than Crash is also I would consider that long volatility, and fiat and dips, but not long volatility on an overall broad market and a yield fund. That it was revolutionary. But anyway, all right. Well, too bad, so sad for Tress, because this would have been great. No more Valley of Death for Tress. Look at that; it just popped right out. All right. So let's look at the buffer report. Okay, buffer report. Now let's see, just starting up here from the top, SPY-T is bouncing back really nice today, and that's the reason you allocate to SPY-T, or people that do allocate to SPY-T. That's the reason, is because it has uncapped upside. So it should be able to perform every bit as well, or maybe not every bit as well, but it should be able to have a lot of upside and not be capped, and not be capped over a certain point. Let's just say in huge up days, and today's counts as a huge up day. So the trade-off was yesterday. SPY-T was because it's one of the more high-powered ones on up days. It took it on the chin more on down days. That's just the way it works, and it was one of the worst performers yesterday. Now, JEPY is more typical of a fund that's totally capped, its benchmark is up 1.8. It's only up 27 bips. But remember yesterday, JEPY was the best performing, or one of the two best performing ones on the board, I believe. Got a lot of buffer. It only got like half as much buffer as the market, which is a big deal when the market's down 5% and your high yield fund's only down 2% and everyone else's high yield fund is down 4%. It makes a big difference. Anyway, so JEPY did a good job. JEPY did its job yesterday, as did JEPI. JEPI is on the more conservative side too, for a different reason. SPY was one of the big losers yesterday, but it is snapping back today, and it's because it's also a high-powered one, so we would expect it to be a big loser. Or was it iSpy? It was either iSpy or SPY. I think it was iSpy that was a big loser. Anyway, they're both good funds, and they're both high-powered. XDTE did not do great yesterday, but it's bouncing back really well. Now, look, SVOL and ZIVB did really poorly yesterday, and they're both doing really well. So that's great to see. I'm making a separate video just on these funds. I'll shoot it as soon as I get done with this daily covered caller video. Oh, I also need to make a video on Howard's fund. I'm going to make a video. They've updated the trades, and I'll make a video on that as well today. Be looking for the SVOL, ZIVB video, and then also a separate video on KQQQ. All right, so let's see. FEPI, FEPI's doing its good old job. All these other ones are fine. I mean, let's check out QQT. Yeah, it's, not doing great. Anyway, WiMAX looks really good. Anyway, you'd expect things to look good. If something doesn't look good on today like today, it's a problem, or else there's a reason. In JEPY's case, there's a reason. It's because it's the safest of the bunch on the downside. All right, so let's look here at the chart and just kind of take a look at it this way. Yeah, you can really see SVOL and ZIVB snapping back, and that's what I'm making the video back, why they were down so much yesterday and why they're snapping back so hard today. See what else we have here that stands out. Of course, YBTC and Maxi, doing well. Theta also snapping back. The video is also going to be about THTA. I should have said that. SVOL, ZIVB, THTA are similar funds in a lot of ways, and that video is going to be right after this one. I have the slides right here. See that? See that? What happened? Yep. All right. Anyway, I'll shoot that as soon as we're done with this one. All right. Is that all we had to look at over here? The rest of them, I would say, are just within. Let me make sure. Let me make sure you guys can see that. Gosh darn it. I hate when sometimes the PayPal thing cuts it off and sometimes it doesn't. I don't understand why it does that sometimes. I'm so sorry. All right. Well, hopefully you can see that better if you were looking for your fund. Yeah, I don't have time to talk about all of them, but I mean, you could see it's like I say, the high powered ones. GPIQ is definitely high powered. GPIX, GPIQ, Bali, JEPQ, all those, they pretty much took it on the chin yesterday, but they're snapping back hard today, which is great. The most high-powered one on the board, or one of them, is probably the most high-powered one on the board is ZIVB. And it was also the one that was down the most yesterday on the whole board. There wasn't Bitcoin related, but we'll talk about that in the video. All right, so let's look now at let's look here real quick. We're going to start looking at the term structure every day. This is the VIX term structure. So you always hear people talk about VIX and has a term structure. And the term structure is every month there's a new futures contract. So you have the August futures contract, and today that's at 23.22. September is at 22 something. The next one's at 23. The next one, November's at 21. December's at 20. So you can connect a line through it, and they call that a volatility surface or or they call it a VIX futures, a futures term structure. Anyway, you can see based on that, it gives you hints on how the market's doing. So yesterday, when the market was melting down, you can see the purple line was yesterday's term structure, but the days leading up to yesterday's, the orange line's a normal term structure where the current month is the lowest, and it goes up as the furthest you go out. Whenever you start getting what it's an inverted term structure where it starts going, the slope goes down as you go out in time. It's called an inverted term structure, and that's a big warning sign that the market's going to sell off. And the VIX had been warning us for a couple of days the market was going to sell off, and then sure enough, we had the big sell off yesterday. Well, today the term structure snapped back, not really to normal, because it does slope down from the first month to the second month, but then from the second month to the third month, it slopes up again. But then it slopes down the rest of the way. So maybe we're going back to a more normal term structure, but we're going to look at it every day. But a normal term structure ought to be lowest on the front end and gently slope up. Like I say, this orange one is as close as we've had to normal. That was July 31st. And even on July 31st, we were, watch this. I'll go back to July 30th, July 29th, July 28th, 27th. You could see that's kind of how the term structure was, but it had a general upward slope as it went out in time. That's whenever that happens, that's a sign of a normal, market. And whenever the term structure is inverted, it's a sign kind of to look out below for market sell-offs. And sure enough, that's what we got yesterday. So then another thing that we can also look at is just the price of the daily VIX. Now, so right now it's 25. That's a lot better. It hit 60 for a second yesterday morning. So 25 is a lot better, but it's still above its 200-day moving average, and it still has some concerning things. So I don't think the sell-off's over, but it definitely, volatility is settling back down today. I wouldn't be surprised to see us have another bout of volatility or two pick up. I just don't think it's over. So you can look here. We can go back. Let's do this. All right, so we can go back here. The last time it was as high as it was yesterday morning, and it was a little considerably higher, was 2020. In 2020, we had one day that was yesterday, what were we down? 5% at the worst point, but then we just settled down 2 or 3%. But when we were down 5% on the NASDAQ, that was bad. But in 2020, there was a day we were down 9%, and then up like 8 or 9% the next day, and then down like 9 or 10% the day after that. So 3 days in a row of above 5%. Anyway, that's how you get an 80 VIX. Well, yesterday we got a 60 with the 5% down move, but it wasn't out of nowhere. That's what I was trying to say. This the VIX had been warning, had set off warning signals since, for at least a week or two. VIX had been elevated and saying something's wrong here. And that's what I was looking at, and why I kept saying I think it's going to sell off, and why I was telling everyone to hedge. Well, anyway, all right. So let's do this now. Tesla crash, Delta neutral trade. Okay, so the chart here, the chart's a good way to get a kind of a broad view of it. The red line is the pairs trade plus the dividends received. The dividends received have amounted to 13% so far, a little bit over 13%. The blue line is just the NAV return of owning the pair. When I say own the pair, I mean own equal amounts of each ETF. Tesla, which is a bullish high yield fund based on Tesla. Crash, which is a bearish high yield fund, also based on Tesla, but based on a short Tesla covered put strategy. In any event, I think this is interesting. So we follow that every day. It's trending back up. I can't wait for this thing to be back at even. That's the ideal when you do a delta neutral trade, is you aren't hoping for the market. You're foregoing the market appreciation. If you were bullish on Tesla, you would probably just own Tesla and you would not do the delta neutral trade. When you put on the delta neutral trade, you're foregoing any upside or any downside, really. I mean, in theory, but you're foregoing, you're trading all that in for current income. So because when you own the short one together, even when the long one, Tesla's doing great, the short one will be losing money. So basically, you're going to sacrifice any potential upside that Tesla might have if you do the pairs trade. But in return, you're going to get what's hopefully a more durable strategy, a strategy that can make money both ways. And the real trade-off should be when Tesla's going down and you used to own Tesla, you used to get killed. But if you have the Tesla crash pairs trade, even though the crash part may not totally offset it, it will offset it to some degree, and you earn a dividend from both sides. So anyway, that's the Tesla crash delta neutral trade for today. So ZIVB, SVOL, and Theta, we already talked about that. They're doing great. And I'm getting ready to make a video on it. But the reason they're doing great, spoiler alert, they make their money off the slope of this term structure. Okay. So, and they make money when the term structure goes up as it goes out. So it's back to doing that today for the most part. Here's today's term structure again. I mean, not really. The term structure is still kind of jacked up. Watch my video because SVOL and ZIVB do it two different ways. We'll talk about all that in the video, but yeah, actually the term structure is still kind of jacked up. We're really looking for the front end to fall and the back end to rise or some combination. So we'll keep watching that every day. But that's always a good sign. I wish we'd been watching that before, because that's when you watch the term structure, that's how you can tell when a market crash is coming. That's what hedge funds and stuff watch. And not only that, hedge funds actually will trade the term structure. That's kind of what ZIVB does. But then they also use it. They use it to know when to hedge and how to hedge and everything. The VIX is a really fascinating instrument to me. All right. So hope you guys liked that report today. $1 million baby trade. $1 million baby trade's only up 53,000 today because the market's rallying, I put out some content yesterday on an alternative to the $1 million baby trade, which should be this fund right here, AJUL, or really any of them potentially from this group or from a lot of other groups. But these are what's called hedged equity type ETFs. And this one owns the SPY, but it does it in such a way where you can't lose money. I mean, I know that sounds strange because there's no such thing as free money, but you won't lose money by the SPY's price going down. You can lose money from inflation, from opportunity cost, from all kinds of other things, but not from the price of the SPY going down. They use a put to make the price of this, to make it where you won't lose if the price of the SPY goes down. Now there's a trade-off, and you won't make that much either. But anyway, this is a good alternative for somebody that maybe doesn't want to do the $1 million baby trade, maybe doesn't have enough money. The $1 million baby trade, I mean, the problem with these people that do these risk-free trades is to do a risk-free trade, you have to have a lot of money. So I'm convinced this is one reason why the rich get richer. But things like this, it used to, in the old days, it used to be because the little guy wasn't given access. And that's why the rich guy got rich. Now it's that, now the little guy has access and they're letting us play in their playing field here and there. But But in any event, but if you, so yes, if you have $1 million portfolio and you have 50,000 in the bank that you aren't doing anything with, and you can go out there and buy $35,000 worth of options, you've seen it's been a get out of jail free card for this whole decline. It would have saved somebody's ass that did it. But think about the guy that has $1 million portfolio and doesn't have 50,000 cash in the bank, or maybe he has cash, but he needs to pay bills with it or something. So for that kind of person, you could buy this ETF, and that's a lot simpler, and you could let them do the work for you. Like I say, there's trade-offs. You're foregoing some future upside, some appreciation from the SPY. It's limited to like 9% a year or something. So that's as much upside as you have. So if the SPY goes up 50%, guess what? You're just up 9% if you own this fund. But anyway, this fund's a good alternative, especially if you're one of these guys that thinks you can time the market, but you still want to stay invested at all times. Get one of these funds or buy one of these funds the year you think the market's going to crash, and it'll totally sidestep the crash. So anyway, but I like these funds. I'll do some more content on. That's not the only company. There's lots of other companies that have those type funds. That one was just one of the ones that I liked some of the stuff they did. But all right, so I'm going to go get busy on my ZIVB SVOL THTA video. Thank you all for being here. I'll talk to you later. All right, see ya.